Good morning, everyone, and welcome to the European crossover webinar. And it looks like we may be just looking at another very quiet day in FX. You can see the cash dollar index here just lingering here at 93.41. And the euro dollar is just gently higher, barely even a move. And same thing here on the cable, a little bit more of a run off of the lows, but not even that much. And a little bit further follow through with Aussie Dollar. Looking at today's data, we did have a lot of UK data. We had referenced yesterday that was starting like 2 hours ago. So we did get UK GDP, industrial output and manufacturing output and construction output, goods trade balance. All that is all played out 2 hours ago. And then it's going to be pretty quiet until we get into the US session. Where we will have a Canadian employment data. Well, that'd be a big mover on the Canadian dollar. And at 10 a.m. Eastern, we have wholesale inventories. And that is going to be it for U.S. data, wholesale inventories. And then the big mover in the morning will be Canadian employment. And you can see here the Canadian dollar continues to, dollar CAD continues to drift lower. We saw a pretty good sell-off yesterday and then further follow through today. And with that, we'll go on and take a look at the indices. Irina says, good morning, Irina. And we'll take a look at the indices and see where they stand. We've had, it's been a pretty steady progression higher. Yesterday, you can see, even though we took some dips, for the most part, we ended up pushing higher towards the day. And we came up to 11,600, which is a level here, and then we've rotated lower. I guess if you were to take a short against that level, but it took a long time for it to come down. Look at that, just very slowly. You'd think this was on a 1 minute chart, it's a 5 minute. So we eventually did drift lower down here to this level. Remember, we pointed that chart out, 11,552 as the line of demarcation. That's where they went to. But coming into a Friday, certainly the odds are stacked against anybody that's short. So you'd be looking for people to cover, and there'd be an underlying, or what I like to sometimes an undertone bid. I do think we've already come a long ways, though. So my thought was, if we were going to push even higher, we could push into this area here, between 631 into here, kind of like a dead man's area, and then we could then maybe rotate a little bit lower. But right now, the move is to higher. I just think that we've come so far. I think we're a little bit overdone. I think eventually in time they can probably even still move higher. But at least for right now, other than that we took this little dip here, we may be able, I was thinking yesterday, we may be able to come into this area. And that's why I didn't try and take a shot here. But you can see here at 11,605, I had a key level here. But it hit it in a very quiet time of the evening. You see right here in the mid part of Asia almost. And then it stayed there very quiet. I mean, I guess if you're long, it'd be a good area to exit out some of your longs. But it wasn't like as if they sold off real quickly, like as if there was a dip and then a pretty good setup. I mean, it's just been a drift lower. But that's the way I think that may go. S&Ps were doing very well also. They actually held up even better than Nasdaq. Because look, there hasn't even been that much of a pullback. Take a look at gold. Back to that 1922 area. And crude oil. Nice run up here. The thing with crude oil is once it gets going, it just kind of runs. And the thing I don't like about this market is, and I was thinking about it because I thought, it's not maybe a bad idea to jump into this thing and use it as a little bit of a day trade market. But you can see here how it's just up, down, up, down, up, down, no sense of reason. When it breaks, and one thing I don't like is when it breaks, it's very unforgiving. And then fine, okay, this makes sense because it's been trading in this range here. That makes sense. You drop down here, you test this area, okay? So generally in something like this, you go, okay, they found some support. They're going to come back up to this zone, okay? And then we'll probably pull back. But look, it's just straight. We just barely kind of just settle. So you're thinking, okay, well, they'll probably fade against this. Maybe find some support into this area. They just sit there, and then they take off again. Then they come back here, they kind of sit around, and then they start to take off again. I don't see a very good rhythm when it trades. It's trading crude. I mean, it could be different from a lot of people, but you can see it's not like as if this is a 5-minute chart. It's a 2-hour chart, and you think you'd be able to see a lot more rhythm. Like, you come down here, you see here, and then you rally up here, and generally, like a lot of markets, let's say in indices, you come back, you test it, and you can move higher. Look at that. You come back and you sit, and you sit, and you sit. And like I said, this is not like these are 15-minute bars. These are 2-hour bars, each single one. You sit, and come back down. Now they're going to break. Oh, they sit, you sit, and then you finally start to move higher. It's just, to me, that's just frustrating. I don't see any real good rhythm in this market. And I mean, I kind of thought about it. Now I'm glad I see this because to me, it just looks like a chop mess. I like the rhythm that you see here in indices. I guess if I was going to trade something, looking for something else different, I'd probably go with the gold then. Yes, you sit down here, but look, this was a big break of an area. And you work a little bit higher. Look how you come up to this 1922, you sell off, you come back, you test it, come back, and one more test, and then you see this fade. So there's some rhythm here. But this, to me, that's just slop. So forget that idea. I thought, well, you know what, maybe I'll start to fool around with crude oil. You know what? No, thank you. We'll take a look at the news. Yeah, Raina says you can look at Nasdaq. I mean, yeah, we are looking at the Nasdaq, the NQ, and I don't look at the cash market directly. So I'm just looking at the futures. I want to say cash. I mean the NDX, which really is based on the. And I'm saying when I look at it, I look at the individual stocks and I look at the Nasdaq 100. And I mean it's basically the same thing right there. But once again, that's my focus. So I don't try and look at. Let me look at the cash versus the futures. No, I'm not. I'm looking at the cash indices, the cash equities. Like I said, the big 8. And I look at the NQ futures. But looking at the NQ, as I said, I just already pointed that out. Is that I think that we're going to move higher. There's a potential to move higher, and certainly we did that. We even did it in Asia. I think people keep trying to step in and short it, and I've taken some shorts, but I also recognize at certain times of the day you can do that. As it gets later on the day, and the way the markets seem to be playing out, you wouldn't want to stay there in a short position. Other than a scalp, it really hasn't given you much besides that. But coming into a Friday, that's what I think we can still move higher. My thought was we would get to 631, and we did make it to 605 and rotate lower. If it was during the session, I'd have been interested in taking it on had it been here and taking a pause maybe at 631. But once again, on a Friday, pretty tough to go and do. We can look what the individual equities might be doing at that time, but it certainly looks like the momentum is to push higher. My concern was, and I thought about that late yesterday, is that I'm afraid that we're going to go into a dead man's, like I said, no man's land right here. You see here, is that once you get past 631, it's really blue skies up until 11,739. I'm thinking, wow, so if you step in, let's say you try and get fancy Dan and try and step in at 650 or 660 or 675, this thing can keep on going. There isn't any real resistance. You see here, it's blue skies ahead up to 739. Now, we may pause before then, and we could look at a 30-minute chart. There's 627. And still it's blue skies ahead all the way up in here. There's a little bit of something here, but not anything really definitive at 678. And that's my thought is, like I said, it's hard to see it here. Let's see, this is September the 4th. Let's see if we can go like this. Okay, here we go. So you can see here's at 627, and remember on the 2-hour chart it's 631. You can see here there's a low here. Let me try and stretch this out a little bit. But you see the next real move, there isn't one. You see, there isn't. It's just blue skies ahead after that. Because this is just that close of this bar here. So you're looking for something else here. There still isn't. You have to come back to here to see if you find something. And that would be $676. So if you were long, they may take a pause there, but I'm just saying is it's blue skies ahead once you get past 631. And coming into a Friday, who the heck's going to want to be short? You see what I'm saying? So I'm pretty wary when it comes to trading on a Friday, especially in this kind of situation, because it's anybody. I said that yesterday. We've rallied or moved higher yesterday on the back of traders or shorts from Asia and Europe yesterday. Because those people, remember we had that sell-off on, was it Tuesday, I guess it was? I'm trying to think right here, trying to get mine right. Or was it Wednesday? Anyway, we saw that low come down here. And then people came in and shorted. So I guess it was this is Thursday, so I guess it'd be Wednesday. We saw that sell-off. That's when Trump said, I'm not going to give a deal, blah, blah, blah. And we saw the sell-off, so I'm sure people came in and said, oh, okay, well, I'll take a short here. And I remember mentioning 361 was a key area, and it was on the way down. Look at that. See here? I'm like, okay, well, I might take a short here. Okay, and then it gets a little higher, and you're like, oh, wow. Okay, I'll step in here. And so people from Asia and Europe, all those people were underwater. They took shorts unless they just jumped out and covered. So that's what I'm saying. We went on this market moved higher on the back of those traders having to cover shorts. And we saw further follow through in Asia. If we had sat here and we'd made that run up to 631, then I would have like taken a piece off of it there. 605, I mean, I really wouldn't have been that interested because I'm thinking, what if it squeezes even further? Because today's a Friday. Had it not been a Friday, I'd probably may step in and taken some there. But once again, I think we can still push higher, and we may do just that. And really, I'm more not so much looking at the futures at that point. I'm looking at the cash equities. But you can see here it's got the momentum going with it. Here's the buy signal on the 30-minute, and it just stayed like that throughout the whole time. I do usually say moving averages, exponentials on a 5-minute for a short term, but you can see here on the 30-minute, that was a solid buy signal, and it stayed the whole way. It finally dipped below, but it held. It still held as a buy mode, so you still would have wanted to have been long, although yesterday was tricky, a little bit tricky, there's no doubt about it, but you had to be careful when you shorted. I shorted a few times, but had to be very careful on that. And you can see the same exponential moving averages, and it holds here. You see that? And we don't get a sell signal until here. And then we stay low. We're still in a sell mode. Oh, you know what? Yeah. Sorry, I was Mark was saying, "Hey, we can't see your news," and I wasn't. I was. Yeah, I will go back to the. I thought it was on that, and it was on the cash equities chart. So I'll go over this again quickly. So Irina was asking about the Nasdaq. I thought we were on this right here, and then we'd go to the news. So as I was saying, is we're looking at the Nasdaq here, the Nasdaq, the NQ, and my concern is that if you look in here, is that we could move into this area here. You see between 631, and I was saying that there's just open air above 631. There is a bit of a pause here around 676 in here, which I'll pull this back. Right in here, comes in at 676. But really, like I said, my concern is you're in dead man's land right here. There's just nothing there. And I did mention also the 605, which is what we went to, and we rotated a little bit lower. But had we not gone to 605 and we made the jump to 631, I might have taken something off. But once again, coming into a Friday, you have to be really careful with that. I was pointing out in the exponential moving averages, we were taking a look on the 30-minute, and I pointed out here, same thing, it comes in at 627 versus a 631. But I was stating here that if you look on the exponential moving averages, it's been in a solid buy mode. And I pointed out that on Wednesday when Trump, was saying, I'm calling off the negotiations for the stimulus deal, that's when we broke lower. And so I was pointing out is the move that we saw yesterday was primarily on the back of shorts from Asia and Europe, because when we closed down here, we actually closed, I think, here. And then we took a dip. And so in Asia, people may have come in and said, I'll take a little piece of it here. We talked about 361 previously, and that was important. You see here how the market bounced off of that. I remember posting that in the chat room, and I posted it on Twitter. And I posted 361, and we took this out only by four handles. And look at the move back. And we saw a pretty good move back. And then, of course, we ended up, selling off. And on the way back, I think, what's his name? Pedro had asked me, where's a good level? I said, well, 361 on the scalp. It did make it to 361. It made it to I think like 342 or 344. But I'd already made a pretty good little chunk here, and I guess I just didn't jump back in. I did jump back in somewhere here. I don't remember exactly where. For a little bit more, but this is about where they closed, somewhere in here, and then they took another dip. So in Asia, people were like, okay, some people might say, okay, I'll take a short here. Some people say, oh, okay, I like that 361. And then by the time they got to Europe, they're here, and then the rest is history. We just keep on moving higher and higher and higher. So that's my take, is you have to be careful trying to play the short side. Because being a Friday, my concern is that they're just going to keep on moving higher. I don't think it's so much an NQ futures game. Here it's going to be about the cash equities. And I think the cash equities can move it up. Obviously, the futures are derivative of the cash. What I'm saying is yesterday I was more focused on the levels in the futures because it wasn't so much a stocks game. It was the whole stimulus thing. And it was what Pelosi was saying or she was not saying. So my focus yesterday was on the futures at its level. I did post a chart for the cash equities in that morning, but my concern when it's all about news, like just, like stimulus talks, no stimulus talks, Pelosi says this, Pelosi didn't say that, then I was focused on the levels of the futures. I wasn't as concerned with what was happening in the cash equities because to me, I thought that they don't mean anything right now. This is just moving on news. And if it's just moving on news and headlines, then you go with the levels here. But today, it's going to be about how further the cash equities can go. And you want to pay attention to those. But I really wouldn't. I mean, unless you just want to me, I think we've come already a long ways. So I would think next week we could come in here, whether it's the end of today or Monday, and then I think we could take a pause back. But I think they've come too far. But I don't think anyone's going to necessarily stand in front of that train on a Friday. So anyway, I wanted to share that. I did mention, I was thinking about, and I wanted to, because since we weren't on this chart, I wanted to go on and I thought about last night, maybe I should add crude oil. I haven't traded in a while as an extra market to go and trade. Like today might have been a good day. As an example, like I really want to be careful trading the Nasdaq because it's already gone a long ways. We could pull back, but it's going to have a good undertone bid. So I had taken a look at crude oil, and we were on the wrong page. And I was saying, I don't like this market. And I thought about it, and I'm like, no, thank you. Because look at how the way this market is trading, and I don't like that, is that you get going in one area, and then out of nowhere, you just run over people. And I was mentioning a good thing here is that we'd fallen and fallen and fallen. Okay, that's fine. We kept falling. We run to an area here. We fall again. Okay, fine. And what I was saying was, if you look at this chart, you're thinking, you could be looking at this and thinking, if you don't pay attention to the prices here, you think, that's probably a 5-minute chart. That's why it's all jig-jagging. You see what I'm saying? But this is a 2-hour chart. So you come down here and you rally and look, we just sit there and drop some more and drop some more. And that's reasonable because look, the market has fallen so far that it's like Blake once said, it's like as if you're on a ladder and you fall off the ladder, you just don't jump up. You kind of sit there and you're like, oh my God, did I break any bones? And you kind of feel yourself and you get up slowly. So that's expected when a market has a hard fall like this. So we did start to move higher. That's all good. We work a little bit higher. And then you come down here and we didn't go too far. And then you just sit there. And you just bounce there in this area, okay? So you're bouncing, really not a whole lot happening. Finally, we break, okay? So you're thinking, okay, they faked them out and they're coming back up, but then they roll over. And then they break harder, and then all of a sudden they rally back up. Okay, then it's probably going to rally back up to this area, and then we'll rotate lower. We rally back, we just sit there, and like I said, it's not like as if these are 5-minute bars. These are 2-hour bars. So it's okay, fine. So we jump into the area, zone. Okay, they probably come back. No, they jump above it, and then they come back in the zone. Then they fall back out, and you think, okay, well, then they would probably further fall through. Then it just sits there, and it starts to take off. And to me, I don't like trading crap like that. There's no rhythm to that. I showed you like what was happening in the futures. There's rhythm. This doesn't have any rhythm. So that's what I was saying earlier. I was saying, no, thank you. So if there was something I'd be looking at, probably be gold, I guess, if I was going to trade. The only thing is when I scalp a lot. So I like to be, if I was trading gold, I'd probably be looking at gold, silver, looking at the GLD, maybe looking at some money stock. Then I get into a minutia kind of thing, but even gold doesn't really trade that way sometimes. It's just kind of hot now, but that's why I feel more comfortable trading the indices because I like to look at I'll look at the like I said, I'll look at the cash equities and that'll give me a hint as to where things are going. As I said yesterday, Yesterday, I was more focused on just the levels because the market was reacting to news and headlines. What Pelosi said, what she didn't say. So my whole focus yesterday was really on the levels versus paying attention to what's happening on the individual stocks. So that being said, let me go on and pull up the news and we'll hurry up and get to the analysis. Analysis should go pretty fast because it's another dead day in FX. So I was just taking a drink of water. Aussie Dollar set for a weekly gain and Kiwi extends downtrend. The Aussie Dollar is poised to end the week in positive territory on Friday, strengthened by the bullish market's risk sentiment and higher commodity prices. The Aussie, which is often traded as a proxy for the yuan, was 14 pips higher on Friday, 71.81, with data showing that the recovery in China's services sector activity extended its fifth straight month. The risk-sensitive Aussie is set for a further 0.25% this week. New Zealand dollar, meanwhile, weakened to 65.07. RBNZ officials said they'd rather be aggressive with the delivery of monetary stimulus and be seen to do too much too soon rather than too little too late. RBNZ cut the official cash rate by 75 basis points in April. It's expected to cut it to minus. It's supposed to go negative by April 2021, so that's why that's weakening. The RBA, on the other hand, is widely expected to further lower its cash rate to 0.1% from a record of a quarter basis point at the November policy meeting, but repeatedly said the negative rates were extraordinarily unlikely. The dynamic helped push the Aussie dollar to its largest weekly gain against the Kiwi since mid-August. And like I said, the analysis should go pretty fast because it's dead. So I'm not going to sit here. One thing I don't like to do, I'm just telling to you like it is, I'm not going to sit here and if we're sitting in a dead market, like let's say this and try and do a bunch of fibs in this when the market's not going anywhere. That's just silly. So, and if we're in a dead market, and we've been in the dead market in FX for the most part in the last 2 days, it's just going to be all pretty much the same levels. You see what I'm saying? So I'm not going to sit there and try and do a bunch of analysis on what is tantamount to basically a 35 or 50 pip range. I mean, that's just silly. So that's what I'm saying. So we should be able to fly through the bias chart. That's why our focus today has been on indices, whether it was gold or crude or whatever. I just don't see there's anything happening in FX. We just saw the dollar index, but we'll get to that. So the dollar set for a second week of losses on Biden win bets, yuan gains. The dollar edged lower on Friday and was headed for a second consecutive week of losses as investors increased bets Joe Biden will win the U.S. presidency and offer fiscal stimulus after the elections. Several Wall Street banks forecast some kind of a stimulus package to no matter which candidate wins, but they say a Biden presidency, if Democrats also retake control of the U.S. Senate, would likely result in a bigger one. And yeah, that's my take. And I've been my take, and I've been offering that and the analysis, how we've been looking at it over the last few days. And yeah, if he wins, and it looks like they're looking at what they call a blue wave. For those that aren't in here in the States, a blue wave is going to be across the board, presidency, strengthening the House, taking the Senate. And then they are expecting a big stimulus bill, because that stimulus bill will be a lot of kind of like an FDR New Deal bill, probably be a lot of infrastructure spending, just a lot. And that's going to be very helpful for the stock market, which is why you're getting this big old bid in the stocks. Rising expectations of a Biden victory has had a calming effect on the market volatility around the U.S. election date. Yeah, and the concern also, remember, we're all worried about, will it be a contested election? Well, if we see a blue wave and the ranges for Biden keep widening, and they keep widening, then you could have where there's tantamount to somewhat of a sweep. Pretty hard to contest something like that. The closer the election, the more likelihood that Trump's going to try and say, oh, this wasn't right. I'm not going to concede, blah, blah. But if the Democrats end up taking like Georgia and for Republicans, heaven forbid if they lose Texas, and Texas is pretty close, but it's still leading Trump. If you lose Texas, it's over, because Republicans haven't lost Texas since Jimmy Carter in the 70s. You lose Texas, there's no way. You're not going to be able to contest it. No way, no how. And that's bullish for the market because the market's saying, okay, you remove that uncertainty. The bigger the Biden win, the less uncertainty or the potential for a contested election. You can contest it, but it's going to be silly when you get rolled. You see what I'm saying? It's like getting in a fight and getting your rear end whipped and then saying, no, I think I won. And you're the one with the bloody mouth, bloody, bruises all over the place. And the other guy looks okay. And you're still saying, no, I think I won. You can say it all you want, but nobody's going to believe it. So essentially that's what they're talking about. The Ipsos Reuters polling this week shows Democrat narrowly ahead of the Republican Trump in 5 states: Wisconsin, Pennsylvania, Michigan, Florida, and Arizona. These are critical states. So if he swings into those, then basically the disparity of electoral votes would be so wide that it'd be silly for Trump, even if he says, okay, fine, contest this state, contest that one. You're still so far behind, it won't matter. So that's the thinking here. So with that, we'll go on and move into the analysis. So let's go move in here with the euro. And like I said, obviously there's more impact here with the Canadian dollar. Now that's different. Probably going to run a fib on this and see blah, blah. But man, if you're looking at the euro and we're trading at a 30 pip range, are you kidding me? It's just like, you just say, use yesterday's buzz chart and then, roll back and go back to sleep. I mean, it's just, that's the way it's trading. So you can see yesterday, look at this. Look at this range yesterday. The bottom was 33 and the top was 80. You weren't even trading in a 50 pip range. You see what I'm saying? So do you really think anything's going to change from yesterday? No. So, and it actually is the same. So I did put the notes. You're close with the doji. You can see here. Boss chart support and resistance remains the same. Resistance would be 1818 with support at 1710. There we go. Nothing. So we'll go into cable. Cable closed slightly higher on Thursday. Resistance would be 29.98 with support at 28.88. And these levels are set up for, although we'll give it a little bit more room for the euro because if it does go higher, the resistance could be well before 1818, but this is where the real true, I like to call the line of demarcation. We're going to see that real fight come in at 1818. If we get going, yeah, you'll trip some up, but if you get past 1818, holy smokes, then you could really start to get something going. And so that's why it's somewhat higher. I could say, oh, well, the high for today is going to be more like 1892. Well, yeah, you might make it to 1892, may rotate a little bit lower, but the real fight would be at 1818. You get past 1818 and you better watch out. So that's why that one's wider. But that being said, in a dead market, I'm not going to try and make up stuff just for the sake of, like my mom used to say, flapping my gums. That's just nuts. I'm looking at the Aussie dollar. Aussie closed high on Thursday. Resistance on Friday would be 72.19 with support at 71.23. And you can see we're trading in a very tight range. I mean, the range looks like 30 pips. I mean, are you kidding me? Actually, I don't even think it's even 30 pips. I think it looks like it appeared to be about 25 pips. And then to the Kiwi. So we did have this slide, but you can see how the Kiwi came back here. So support's going to be the low bar here. You see it comes in about, it actually comes in almost with this bar. So, and the high to this bar. That's going to be 65.68. And on the upside, it's going to be the low bar here, 66.28. Moving on to the CAD. Okay, we saw a pretty decent little fall here. We took out 32. So the dollar CAD saw a lower close on Thursday. Friday may further the momentum. Support will be 31.36 with resistance at 32.39. But remember, we do have the employment report today, so you may see it go beyond that, but I'm going to stick with the levels. So it's going to be 31.36, 32.39. Let's go into the peso. This peso has been all over the map. I mean, holy smokes. And look how quiet yesterday was. Really quiet. And then today's pretty quiet now also. After these wild ranges. Dollar peso closed lower on Thursday in a tight range. Support on Friday will be 21.16. So you see for the dollar weakness. With resistance at 21.52. But it's pretty quiet right now. Moving on to the dollar yen. That was the one right here. So the dollar yen, we pulled back a little bit, but we're still relatively steady. Our support yesterday was 557. We're going to keep that. And on the upside, 630. Don't really see it doing that. That would be the resistance. I just don't really see that it's going to come up there. We'll just leave it. But that would be the trigger if we get above 630. I guess we'll leave it. It's kind of like the euro. You know, the 1818 is a ways away. But you could go up to 1787. You can go up to 1798. Even 1806, which I referenced that before. But it's 1818 where rubber meets the road. There'd be a big fight. And if it gets beyond 1818, don't be short. Cash dollar index is going to be 93.24, which we had. And the upside, let me see here, is 93.87. And going on to the cross rates. We had 69.95. I'm going to keep that here because from where we were here, although it was very tight range, um, technically we push up to here. This is where the real resistance comes in. Let's not shortchange it. So, well, 70.14. Don't want to get stuck, caught flat-footed. And support. We look in good shape here. It doesn't look like something's going to turn around and reverse, but it's still trading in a relatively tight range. But as we're busting up here at 70, we'll go. We'll just go to the 2-hour chart. Right there. It's too close up to be there. This pivot right there. Oh, right here. 69.67. And the euro yen. I'm pushing here. Right there. 25.30. Right there, 24.51. A little odd. I was thinking about dropping one of these. Maybe we'll go with the euro pound. I don't know whether to drop the euro yen or possibly the euro kiwi, and then just picking up the euro pound. At times, the euro yen used to move around a lot. I don't know, like I said, but maybe dropping one of those and putting the euro pound instead. Here's the euro odd. Support's going to be right there. 63.62, maybe right there, this higher that bar, which is 63.75. Resistance. So if anyone has any suggestions on which one to drop, if you want, we could replace the euro yen or the euro kiwi with the euro pound. Resistance is going to be right there, 64.39. And looking at the Euro Kiwi, this sets itself up for a little bit of a move lower. Resistance is going to be 78.80, just going with the level. Support for today is going to be that high right there, 77.62. Another one is the Aussie yen. It doesn't move all that much. It used to be a big mover in the day. You could use it as a proxy. If you want to trade the stock market and you want to trade the indices, you could trade them as a like you want to trade the S&Ps, you could just trade the Euro, the Aussie, the Aussie yen, and it doesn't respond that well anymore. And the ranges are really tight too. You see what I'm saying? I mean, this is like a daily, and it's not. I mean, it's moved some here, this move, but not really a whole lot. So I wouldn't mind replacing this one too. But on the upside, it's going to be the close right there, which is 76.24. And the downside is going to be the bar right there, 75.47. I mean, that's what I'm saying. When you look at it, you think you're looking at a 30-minute chart. It doesn't even move that much. You say, look at this. Look at that. It's just sitting there. It's sitting there. It's sitting there. It finally moves higher. Then it kind of rotates slower. I mean, this could be like the Euro pound or something. It doesn't even move very much. You know what I'm saying? So we'll look and see if y'all want to revamp those and potentially bring on the Euro pound and definitely drop one of these. Here's the like the guppy. The guppy moves around. You see what I'm saying? These are some decent movements here. But if you look at the Euro, the Aussie yen, or the Euro yen, I don't think they're necessarily worth following, or the Euro Kiwi. I'd probably inject some new blood in here. It's struggling here. We'll go with this close here, which is 37.37, which isn't much from where we're at, just 4-pip move. And let's say they're open for a little bit of a dip back, and that would be at 36.42. And sterling odd. Keep it simple, 79.50 for support. And on the upside, we'll go to 2-hour chart. And you can see right there, 80.79. And that'll do it. And let's see, Euro ought to be replaced by Euro pound. That's what Jane says, and that's what we're going to go with. So going forward, the Euro odd will now be replaced by the Euro pound. We'll leave it there for today, but starting next week, it'll be the Euro pound there. And that'll be it. Although we'll take a look real quick in the I guess you'd call it the pre-market hours versus after hours. I mean, but you can see here on the 30-minute Google up a little bit higher. Apple just kind of hanging around here. I kind of think Apple's kind of like a no man's land, but next week we have the event. Look at Microsoft, still pushing higher to 11. Let me take a look at the 2-hour chart. And we can still move a little bit higher. And let's go to the other set of 4. And you can see here, Amazon's here at 3,200, but all of them seem a little bit stretched. It didn't seem like that yesterday, but we still pushed higher. So here's 3,200. Look at Tesla. You see, they're not doing anything in the pre-market hours. You see here, 430. And then look at Netflix, just barely a little bit hot. You see how they all look kind of tired. Here's Facebook, and that one's always on the bid. Facebook. So I always say that's a little bit of a tone setter. When the rest of the market, the equities, big 8 are dead, or they're not going anywhere. As long as Facebook's got a bid, it'll at least hold up the Nasdaq futures. And you can see here Netflix kind of hanging around here. They all seem, and you can see here like Netflix, you see right there that 265. That's pretty decent resistance here. We can take a little bit on a 2-hour. You see right there? That's a good level there at 265. You see what I'm saying? So we just seem like we're at a point. Look at the Netflix, not too far away. 559 is going to be a very, very good level. And look, it's already had a pretty good solid run. You see, I'm going to say 531. You see, so we're in an area where we can take a pause. So and then look at here, Tesla here. I just don't see where there's another drive. That's what I'm saying. You could easily, it's tough to take this on a Friday, but I'm just saying we're at some levels that the market's a little bit stretched. The only thing I'm thinking that is today is going to say is they give it the benefit of the doubt because of the it's a Friday. But once again, you can see they're at some pretty good levels, and we've had some pretty good sustained runs. Look at this. Look at Amazon from 3,080 up here to 3,200. And they did get up here to 32, 33. They dropped back a little bit. But you see, they're kind of an area where they could get tired. And Microsoft 214. So I wouldn't be surprised if we bump up to around that 11,631 I pointed out to Nasdaq futures. And maybe we just sit. So today's a day you could actually keep an eye on the actual individual equities to see if you start to see them pull back a little bit. But the problem is, I think that's all they'll be doing. It'd just be some profit taking. I don't think you'd see some, I wouldn't say no one expects a big turnaround, but to see a much further pullback. And so I'm not really seeing anything there. We'll probably have a little bit of news headlines, but these markets seem a little bit stretched. That's what I'm thinking. If we do close up a little bit higher today, I think come Monday or Tuesday, we can see a decent little pullback. But anyway, that's it. Thanks for joining us here on the European Crossover webinar. And Mark says, can you add some indices? Here's why I don't add the indices, is because these markets, and that's a good question, and we'll go to that. And I thought about that, but here's the reason I don't do that. So, like on my Nasdaq just popping up a little bit, 11,582 right now. I'll go to that real quick. It's kind of popping up. The reason I don't do that is, and we'll pull back in this bias chart, I don't try and call the tops or the bottoms, although lots of times they're close. This Euro's got a bigger wide range because, once again, it's in a range. But I like it to be where you can use a bias chart, and like I said, whether you use it or not, you can use it as a tool with your own analysis. You say, I really like the Aussie Dollar. You go, oh, okay, well, 72.19, maybe I should take a little bit off. Some people might say, I think I'll take a short against that. But the moves in the Nasdaq, take a look at that. Where am I going to have buy support and resistance? So here's a good example. Remember, here's the day where Trump goes, obviously that's a big news event, but what if I'm telling people, oh, here's the resistance and here's the support, and we just fly through that stuff? That's what I'm saying. It doesn't work. It's not going to work very well with indices. It's just not, because the ranges are much wider in indices, which is one of the reasons I like to trade indices, because we do get wide ranges and we get back and forth trading. That's why it's not going to work in the indices at all. You see what I'm saying? And same thing, crude oil is it's just going to be like a hit and miss. We talked about that. If it's like, wow, you're really nailing those, and all of a sudden, whoop, and we just go south of the border, and then we kind of hold it here, and then whoop, and it runs all the way up. That's what I'm saying. It's just, to me, it's just like with this crude oil, it's either we're going in one direction or you're going the other direction, and there's no give back. And like I said, in the Nasdaq, my move is towards scalping. Let's say even if you're day trading, this isn't going to help you in these markets. I mean, it might have helped yesterday when I posted in the chat room and on Twitter. 11552 is the line of demarcation, and you can see how well that worked. I mean, I posted this from in the morning right after the cash opened, and you can see how the market, we broke lower and then we traded against this 11552 several times. We finally got above it, and then we rolled off of it, and then we got back, and look where they went to 11. But once again, like I said, now you're looking at giving support and resistance, like in 50 handle ranges. That, to me, that's not going to be good. That's why, like I said, I'm going to go with what Jane said. I'll just replace the euro odd with the euro pound. If there's any other recommendations, that'd be good. But yeah, Mark said to look at the Dow, which I really don't look at very much. I try and keep things simple. For a while, I used to look at all three of them together. Honestly, I don't even look at the S&P much. I'll have it there in case I see a big movement or something where I can say, wow, the S&P is holding. But for the most part, I just keep it simple. I just look at the Nasdaq and I look at the big eight, because that's what I'm using. I'm basically using that big eight to tell me where to come in, or, this three of the big eight are starting to run out of gas. Okay, then I'll short the S&P, the Nasdaq futures. So I try and keep it simple, and that's what I'm geared at, is just trading the Nasdaq and the Nasdaq futures, or Nasdaq futures and that. But we'll take a look at the Dow. And Dow was trading, I think it was 2 days ago, the Dow was holding up real well while the other ones weren't holding up very well. That's what I'm saying. So I'm just not interested in looking at these. I've done that before. I would just look at the three together and try and trade off them. But they're trading different stocks. So that's what I'm saying. It doesn't really work all that well. Sometimes it would. But you can see the Dow, we've got resistance right now. Right there, you can see that level, which is 28,442. If we were to go much higher today, this would be the key level you focus on. 28,560 mark. And then obviously the key level on the downside is going to be 28,156. So 28, before you get to the 28,156, if it's a quieter day, you can see how there's a lot of trading going here. This is going to be your pivot right there. You see that? 28,258, 28,258. So if we rotate lower, that's where you'd be looking to cover into that, 28,258. And like I said, my success ratio has gotten pretty decent. Maybe it's better than decent. But the reason I've been able to do that, it's not bragging or anything like that, is because now that's what I do. I look at the cash equities, because when I would just trade just the levels in Nasdaq futures, I'd be like, wow, well, it went through this level. Why is it just holding here? I mean, it should have held here, and now it drops here, and it looks like it's in break lower, and it just holds. Yeah, the levels are important, and they do help. But what I do is when we look at a level, then I look at where the cash equities are, and they tell me if there's still more strength or it's going to hold. And that's helped me a lot. So what I do is I look at the cash equities, and I look at the levels. I do plot the levels in the 5 and 30 minute and 2 hour. And then they tell me when we move to a level, then I look at what the cash equities are doing. And they tell me if we've got further gas to the upside or we're starting to run out of gas. So that's why. But it's a good recommendation about the indices. And I've thought about that, but that's why they won't work, because they're moving back and forth. And the problem is that you'll hit a new level, and that's resistance right here. You see here it's holding up really well. And if we break lower, then here's a new level, and back here's the support. You can't really convey that on a bias chart. You can't. And I'm day trading / scalping to that. So, I mean, if you were to say, okay, our resistance is going to be 11,600, but we're trading at 11,530. Well, that's 75 handles. To me, that doesn't do anybody any good. unless you got real deep pockets. You see what I'm saying? So that's why it's not. It's a good suggestion. I've thought about it many times, but it won't work putting in indices. But that being said, we're going to cover the euro pound versus the euro odd starting next week. And thanks for joining us.